Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. I've been pretty quiet today as far as trading goes, just because, it's obviously the FOMC day and there's, some risks that are associated with today's decision. And it's an FOMC day, and a lot of people see it as a non-event. Do you know the reason why I feel that it is going to be more of an event than a non-event? It's going to be more of a kind of a move. Do you know why? The reason why is because the euro is right up against key resistance. This is make it or break it for the pair, right? So whatever happens today, I think the move is going to be fairly exaggerated. Yeah, Joe said the yield curve control. Yeah, that's obviously a risk. And just from what I've been reading, if the Fed does, talk about the yield control, if you will, and that's trying to keep certain bond levels at certain levels, or certain bond maturities at certain levels. Some people think that that's actually going to be a rather a bearish event for equities, because it's going to be less liquidity going into the market than it would be otherwise. Okay, so if they decide to go the route of yield control, just realize that that's probably going to be dollar bullish. Okay, dollar bullish, and also equity market bearish. All right, so remember, the dollar and the S&P right now are pretty mirror image, if you will. Okay, and so today's outcome and where the euro goes from here is, going to be more due to probably what equities do. Well, I think it's just all going to, move at once, and that's why it's so important that we watch today. As much as people say, "Oh, this is a non-event," I don't know. I don't think it's going to be a non-event, and here's the reason why. And I'm going to use the euro as our prime example, but I'm going to talk about other currencies as well. So here's the daily chart in the euro, and if you've been missing this thus far, then you're not watching my tweets, or you're not listening to the face webinar in the morning. We're at pretty important resistance. Why? Two reasons. First and foremost, this is a let me just show technically. You see this fib here of this last move lower. That's 161% extension. Confluence of an 88%. Oh crap! I grabbed the wrong thing. Oops. That's what she said. Oh. All right, sorry. A little pre-FOMC humor. All right, so from high to low, that's the 88% retracement, right? Okay, so we're nudged up against a confluence of resistance at 114. So my 2 cents is, if we break 114, we're going straight to 115, which would be this resistance up here, just so you guys know. And why? That's a multi-year trend line that we're knocking our head up against. Confluence, all right, so let me just, highlight that. The confluence of the 88% retracement, also the 161% extension. I know it's overbought, but we can, let's face it, we can become more overbought in this, right? Right? Yes, I made up that word. We can become more overbought in this type of situation. So just realize that after today, we could be breaking out and we could be challenging 115. Now, let's say equity market sell-off. Let's say the Fed adopts some sort of yield control in the market, and the equity markets actually act negative, all right, and we start to see the dollar strengthen. Well, then that's pretty important, because a move from current levels around 114, if we break through 112.50, that brings us directly to 111.50. So why do I say that? It's because you have a double top, right? Double top, neckline break, extension, sub 111.50, but 111, let's say roughly 111.20. Okay, so you've got a potential for today, let's just think about this. A potential for today of a move to 115 in the next, let's just call it 24, 48 hours, or a move down to 111.20. Either or. Look, I don't care what happens, but to have the opportunity to move 100 to 200 pips in either direction, I think today's going to yield a little bit more of an explosive move than people believe. You guys know that my firm, they follow a couple of analysis firms that are institutional, and a lot of them were talking about how some volatility options have been purchased in the euro today earlier as well. So we talked about that in the chat room. It's like, okay, we might actually get a little bit more of a move than people are expecting. So those are my thoughts with the euro. Now, what is another currency pair we can look at to really confirm what we're thinking? Well, here's the dollar Mexican peso, and if you were in the chat room earlier, I was looking for the failure at 22 and for it to move back down. This is obviously key resistance, and what's a really big deal here is a move above 22. This would be risk off. Okay, so if you're looking for dollar strength, look for it in. Let me take that back. If you're looking for dollar strength, look at the dollar Mexican peso to confirm what you're doing with the dollar in other pairs, whether it's the Aussie or the euro or the pound. Obviously the yen's going to be doing its own thing, but because if we rally back above 22.05, then that means it's a risk off move. Why is it a risk off move? Because that's what happens to emerging market currencies in a period of risk off. You're going to see the dollar strengthen against them. And why is 22.05 such a big deal? Because I'm glad you asked. Because it was the major breakout point right here from January of 2017. It was also the 50% retracement of all the way down here, the move where, the very bottom here, it's 50% retracement. I've been looking at a couple different levels, so let's just go ahead and put it there for now. 50% retracement. Also, if I'm not mistaken, it was 161% extension. (127% extension, excuse me) of the triangle. And you could really say it's a triangle break, measured move for the most part. I mean, I think it pretty much was, well, we completed one for the most part. Okay, so look, it was major support on the way back down. Back above 22.05 is going to be major. It's going to be a breakout point on the way back up. This happens, that means stocks are pulling back. If this happens, that means the euro's probably heading towards 115, right? And stocks are going higher. So specifically, that's what I'm looking at. Sorry, I just read Simon's comment. Hold on, I'll finish laughing here in a second. Let me finish my comment first. So that's really predominantly what I'm looking at now. A couple of other things, I guess, that I should point out. Look, if the euro breaks out, don't forget that the Aussie is going to break out. This is a big one. We start taking out the 70-30, 70-40 level. We're probably heading to 72 cents. And no one thinks it can happen. So, I mean, we're all looking at it going, it's way too overbought. It's divergent now. It's no way. Usually when you feel that way, it's probably going to happen. You know what I mean? So as long as we're above this trend line here, there's no reason to be bearish yet. Kiwi, also strong gains. They could continue. Cable, we break above this trend line. We could be trading back at 130. I mean, think about it. I mean, if the euro's trading at 115, where does that put the cable? 130? put the Aussie? 71.50, 72 cents. Where's that put the Kiwi? 66, 67 cents. There's a lot that can happen. Dollar Mexican peso down at 21. So I think the dollar is vulnerable. Do I think it's going to reverse today? It's not my decision. It's the Fed's decision. But I do think that we are at a very pivotal area in the currency market. We're at a very pivotal area in the currency market where it will reject epic, or it's going to break out epic, right? Either or. Where that takes us, post Friday or going into next week, I'm not too sure, but I mean, we could have one day of even a squeeze and a reversal. Squeeze to 115, double top it and reverse. I mean, that could happen. But I'm just saying that, today we should be able to see a pretty good move. Hopefully, I think that the chances are high here. All right. So Simon said earlier, lockdown Blaker, human chip batteries running low. Dieter said, yes, the DAX as well. Yeah, yeah, I mean, S&P looks like we can continue to squeeze. NASDAQ still breaking out. S&P is, the Dow is holding up really well. Here's the NASDAQ. No, this is Shanghai Composite, sorry. The DAX, DAX has pulled back a little bit from pretty key resistance, but yeah, I mean, we break above 12,900 and it's going to continue to squeeze. Tiana says NDX, another one to watch at highs. Yeah, I mean, that should be the NASDAQ composite, right? Oh no, it's the NASDAQ 100. Okay, yeah. Well, it's done what we're looking right at it here. I mean, it just continues to rip. I just, I can't imagine being short equities right now with the NASDAQ breaking out the way it is. It's just hard. Nassim said, when the mitten of the feed, I'm not sure if I understood your comment. However, I want to thank you for your comment. All right, guys and gals, if you're listening to this after the FOMC, that means you're not a ForexAnalytix subscriber. So make sure you try it out. It's only $1 for 10 days. Then you can join all the rest of the people that are listening to this live. And those that are listening to this live, a lot of them are in the chat rooms with me right now. So you guys have a great day today. Good luck for FOMC. I'll see you in the chat room. I'll be here, obviously. And for the rest of you, thank you for tuning in. Talk to you soon. Thanks, guys. Thanks, Brock.